Hello. Good morning again, dear brethren in the business of trading. How are you guys doing? Are you guys okay? Oh, look at Nasdaq. Look at Nasdaq. It's been a bad time for the stock market since the beginning of the administration. People ask me, what do I think? I don't have anything I think. And I don't like thinking about what is going to happen, what will not happen in an area where I have no control. Excuse me. I only literally think of what will happen, possibilities and impossibilities. If I have some way to influence the outcome of anything, so I don't know. We'll just see. And this is the reason why I enjoy being a day trader. Excuse me. This is why I enjoy being a day trader because, and also with the current market condition is where my trading strategy really comes to life. Also, I don't enter the market with a plan to buy or sell. I enter the market to just trade what the market, the price, the candlesticks, the chart shows me. So because of that, we're able to take advantage of the kind of movements we are seeing. I don't need to mark this area, it's already too far. So yeah, it comes to life because the only disadvantage I've been having is that because of the volume that is in the market, there are times I'm not able to enter a trade because you see a candle since the past 2 weeks, one 30 minutes candle will easily be 1,000 pips. And I usually put my stop loss below the previous 30 minutes candle, and my rule is that my stop loss has to be in the 300s. What does that mean? It means that I would never enter a trade if my stop loss area, which is below previous 30 minutes, is up to 400 pips. I will not enter that trade. So that's the only disadvantage I've been getting on the market, that sometimes I cannot enter it. I will see a trade, but I cannot enter it because my stop loss area is just way too big for my rule. But besides that, I've been getting a lot of good pips because I buy and I sell. And also, when you trade it in a way that you don't really have a bias, you just trade what you see, you get very used to both directions. You know, there are some traders that are only comfortable when they're buying. There are traders that are only comfortable when they're selling. But when you trade what you see, buying and selling, it's all the same thing to you. Oh my God. I'm supposed to color code the chart because I'm talking. So this is a 4 hour. This is a 4 hour as well. Is it? Yeah, this is a 4 hour. Just trying to build that here, guys. No, I'm having this itchy throat. Okay. So I could look at my chart, right? Red is for the daily, green is for the 4 hour, blue is for the lower time frame. It helps me see clearly. It may not just help me see clearly, it helps define the quality of my trades because I'm able to know where price is. And we all know that the higher the time frame, the stronger the zone, right? Now, based on that information, based on that knowledge, I'm able to know, I'm able to know that this is a zone on the 4 hour that just got broken. So it makes the trade a little bit more of a quality trade to me. So it helps me. That's how it helps. That's how color coding my chart helps, because I mainly trade on the lower time frame, right? And because I mainly trade on the lower time frame, not mainly, I enter my trades on the lower time frame. Because of that reason, I spend most of my time on the lower time frame. But now, without having to navigate back to the daily and to the 4 hour, the color coding makes me just know where price is trading at without going back and forth. And in the moment, it helps me know the quality of trade. Happy. What am I looking at trading? If I get this candle to close bullish from here, we can buy. Why? Because in this range, there is a, look at that, 1,200 pick range, so big. So you see, when I was telling you guys that a lot of times I would not be able to enter a trade because of stop loss, assuming this trade, this thing closes here, I cannot just enter this trade and put the stop loss behind there, because under this, but can you see 620 pick range, way too big, and I always don't want my, I always do not want my what's it called, my stop loss to be more than I want my stop loss to stay in the 300s. So this around here is the most I would take. So this has been one reason why a lot of times I've missed trades in this very, very, very volatile market. Just using that to give you an example. Anyway, if price closes bullish, and maybe if it closes bullish and I'm able to get price, probably retrace and give me an entry, you can buy. And this is a good range to go up. Even this area, the way price could possibly reject. Even this area where price could possibly reject, there's a good range from this bottom. Correct. And then price push and close above, continue the way up. If we get candle to push and close above this area, we can buy. Close above this area, we can buy. However, if price pushes down to this area, this is a bullish confirmation from here, good area to buy. Bullish confirmation from here, good area to buy. From here, good area to buy. Guys, the reason why I say areas is because support and resistance is an area, so it's in the area. That's why I use rectangles as well. So if I push all the way down here, another good area to buy. Now I like this zone because it could be an area price we respect. However, for sales, if price push and close below this area, we have a clean range to go down, and the range is a reasonably sized range, over 200 pips. If price push and close below this area, we can sell. Push and close below here, you can sell. Push and close below here, sell, and here as well. If price decides to reverse and go all the way up here, and it's a bearish confirmation from here, we can sell. And same thing here. Remember, guys, I did not trade all these zones, I only trade one or two of them. My trading style needs me to have different areas for possible trading. So please don't overreach, don't over leverage, don't revenge trade. Please continue to like, share, interact, and I wish you a beautiful day trading.
I pray miracles.